So we've heard a lot about the squeeze on liquidity as a result of oil prices and the general cutback in government spending, and there's been a lot of talk about tapping new sources and alternative sources of funding. So I think this session on Islamic finance hopefully will raise awareness and hopefully answer some of your questions about the opportunities for finance that exist in the Islamic sector. I would encourage you all, please, to raise your hands throughout to ask any questions that you have. I will try and touch on all the important topics, but I don't know the specifics that each of you may have. But let's get moving on. I'd like you to welcome the three panelists. Firstly, Simon Coombs, the President and CEO of Shaza Hotels. Please welcome Simon. Momin Hyat, the Head of Shariah Governance and Compliance at Mashreq Bank. Welcome, Momin. And Rafi-uddin Shikoh, who is the Founder and Chief Executive Officer and Managing Director of DinarStandard. Please welcome your panelists. Thank you. Okay, welcome, gentlemen. Thank you very much. Simon, I'd like to start with you. I think, for me, just to give everyone a context of what we're talking about and where Islamic finance fits in, what's your view of the financial market picture, landscape at the moment, for hoteliers seeking to raise finance? What does it look like?
Well, I think Islamic finance, as with all finance, is affected by macroeconomic trends, respectively in regions and countries. But I can only gauge the environment by the success of our own growth. Shaza Hotels currently has 10 luxury developments that are fully financed by Islamic finance, and we anticipate that this will increase to over 15 hotels by the end of this summer.
You have 10 hotels at the moment?
Under development, and all fully financed with Islamic finance. In addition, we've also launched a 4-star brand, Misk by Shaza, and that shows the confidence that I have in this sector and being able to finance these projects. All projects need financing. You may be able to sign deals, but if the owner cannot afford suitable financing, then the projects fail. We haven't had any of our projects fail from the inception. So I would say that the asset class itself is extremely viable to hotel developments. But basically because Islamic finance requires a real asset, but more importantly, it's the use of the finance, and what we provide, what we offer the opportunity to owners is the ability to have ethical investments and support ethical investment because of the nature of Shaza as a brand.
Just in terms of the general landscape of the market at the moment, I mean, have you noticed an increased cost or difficulty of raising capital, even using Islamic financial models?
Well, as an operator, as a hotel operator, we are not directly involved in the raising of finance, but we can sense when an owner is having difficulties because the whole development process slows down. They may not tell you that they cannot get financing, but you know because the project isn't happening. Thankfully, all of our projects are moving.
Okay, thank you. Now, Momin, if I can come on to you. So you are our head of Sharia governance and compliance at Mashreq Bank, and you particularly are focused on the development of Islamic product, and structuring Islamic products. Just for those who don't know, what is the difference? What are we talking about with an Islamic financial product compared to a conventionally financed product?
Bismillahirrahmanirrahim. I think if I was to sum up in one line, Islamic banking is all about asset-based financing. So if you step back and have a look at the modes of financing which are deployed by any organization, the theory behind Islamic finance is not to make money from money. So it does not involve the time, so it's not just pure lending, it would involve assets. And that is where it blends very well with real estate. So just to explain it a bit further, any Islamic product would look at the financial relationship between the bank and the client. So broadly speaking, there are three kinds of relationships: buyer-seller, lessor-lessee, and service provider. So if you see on all the fancy Islamic banking structures which exist in the industry, they will come back to these three basic contracts. And in real estate, all of the three are possible. That is why it is a very good blend between Islamic banking and real estate.
And in terms of the cost of raising capital through Islamic structures, is it the same pricing? Is it more expensive? How does it compare?
No, it's exactly, it varies from bank to bank, but you see, if one organization varies in pricing from another organization, that is a different question. But within a given organization, the pricing is completely aligned. So say if a giant Abu Dhabi bank is giving a cheaper finance, that may be happening. But not because the financing is Islamic, it would be expensive. So that is not the case.
Okay, so in terms of just the numbers, the cost of the product, etc., is the same, but
exactly.
But from an ethical point of view or an Islamic point of view, it's compliant.
Correct me if I'm wrong, but in certain circumstances, there is a benchmarking with LIBOR, and benchmarking is fine because it's not the determination, but I've seen structures where that happens. So Islamic finance, although much depends on the attitude of, in our specific case, the attitude of our owners. They wouldn't consider anything else. And the reason why we offer such a solution is because owners wanting to enter into the luxury hotel segment, because it's real estate based, they have difficulties if they cannot invest in certain activities. So basically, we offer that end-to-end solution with the growing market. I mean, you asked me the question on the size of the market. It currently only comprises about 30% as an asset class of global lending. So there's room for growth there, but it is growing at a very rapid rate. And companies who are embracing the halal lifestyle, and specifically also in hospitality, it offers a very good outlet for that growing asset base.
Okay, well, you've mentioned the Islamic lifestyle, and I think that's a good segue into to speak to Rafi-uddin. Shikoh, you are founder and chief executive officer of DinarStandard, which is a research and advisory business specializing in halal food, tayyab food, Muslim travel market, and ethical and Islamic finance. So to Simon's point about global trends, how is the Muslim lifestyle, or what opportunities is the Muslim lifestyle creating for investment, and how does that tie in with global trends?
So there is a very fast-growing real business trend in terms of the opportunity around the products and services that are being affected by Muslim consumer markets. And what we have sized and identified, there are certain sectors that are being directly affected. Finance is the one that we're most familiar with, where at a retail level, as well as a capital markets or corporate level, obviously, there's a demand to Islamic laws or Sharia compliance-based products. But we are seeing other sectors that are equally and more increasingly being affected by it, and travel happens to be another one. Just to give you some context, the other sectors that are being affected by this Muslim or halal lifestyle market are food and agriculture, modest fashion space, even media and recreation, pharmaceutical and cosmetics. And the underlying connectivity there is these are sectors whose core products are getting affected by the Muslim consumer values, who are getting increasingly assertive in terms of the consumption behavior. On the food side today, just to give a little bit of a global context, about 17% of the food trade is halal market related. So, and that represents about $1.1 trillion of food trade, which is getting affected, the whole value chain in terms of its halal compliance. So major manufacturers such as Nestle today, for example, last year did about $7 billion worth of business in halal certified food. So similarly, what we're seeing is in the case of travel, Muslims worldwide, we've estimated through credible, UN, WTO, and other consumption data, spent about $140 billion in tourism worldwide. And this is excluding Hajj and Umrah. A big chunk of that is today getting affected, with the Shaza hotel as an example, but other hotels and hospitality ecosystem players are getting affected, where in Turkey today there are over 30 high-end to mid-end beach resorts that have now converted themselves to be what's being called, quote-unquote, Muslim-friendly properties. What are Muslim-friendly or halal lifestyle or ethical in that case? In the case of hospitality, these are hotels and resorts that are dry to begin with, that offer services beyond that, making sure the food is halal, especially in markets where it's not common. Obviously, it will be less relevant, for example, Saudi Arabia. But in markets including UAE or Turkey or the West, this is a real market, and now we're seeing even beyond Turkey, in UAE, in Jordan, and some other markets where real investments are happening. Shaza is a prime example, into these, what from a financing point of view would be commercial real estate opportunities.
Okay, if I can come back to you, Momin, then. So Rafi-uddin mentioned the convergence and the opportunity for investing in hotels and real estate. What if I'm a hotel developer sitting here in let's call it the conventional hotel resort market? What restrictions, if I wanted to tap an Islamic financial product, what restrictions are placed on me? Does my hotel have to be dry, or does the food and beverages budget can it be separated out?
I mean, there are two dimensions to it. One is the financier leg, and one is the end user leg. So there are some adjustments a given hotel would have to make to accommodate an Islamic bank, for example, and some adjustments to cater for the end user. So on the bank side, for example, banks in their LTVs and their collaterals and securities would like to carve out the food and beverage if it involves an alcohol component. So in the risk analysis, they'll have to see that how significant part is F&B, and removing that, does it still satisfy the bank's risk appetite? So from a financier point of view, that is, I think, the only major concern which happens. And then from an end user point of view, as he also mentioned, Rafi-uddin also mentioned some of the points. So the food being halal, modest dressing, the general look and feel, so there's nothing much to it. It's more what people are already aware of it. I think it's more creating that culture which gives a customer, when he walks into a certain hotel, that he can be comfortable with his values and ethics system in that particular place. So it's nothing extraordinary in that sense.
And in terms of compliance or governance, you would have a committee or a panel of experts, Shariah experts, assessing a product. Does that delay the process? And is there was a time when there was a shortage of expertise in that area?
There still is.
Is that still a problem?
Yes.
I mean, how does that affect raising the capital? Does it put a delay on things?
I think it again depends on what sort of financing is happening. Some financing is pretty off the shelf. So there was a time when Islamic banks were struggling with all the shelf products as well. I mean, we shouldn't forget that Islamic banking in its present day form is only a 2-decade-old phenomenon. So if the financing is not very fancy, so we have off-the-shelf products which would match the conventional speed. But where structuring is involved, now a thing like a carve out of food and beverage would add time, right? So we'll need to present the cash flows to the Shariah board, for example. That would involve time. So in one sentence where there's structuring involved, it may take 3 to 4 to 5 more working days. In simpler projects, this is pretty much off the shelf.
Okay, and as once you get beyond the construction and development phase into the operational phase, is there a sort of review process, the sort of once a year or something, or the committee would come together and check compliance?
I think for that you don't really have to rely on at the level of the Shariah board. Within the bank's own compliance and internal audits, they can manage this. So whatever would be covenants precedent to a certain financing would be an agreement that on a periodic basis they would share a certain information with us.
This raises several interesting questions because as mentioned, the development of Islamic financing, you said it's taken all this time to get to the volumes where it is now. You wonder why that is. People see it as complexity in the financing, but I really think hotels benefit extremely well. They provide a good asset base, as I said, but it's really the willingness of the operators of what they're willing to comply to. So basically, if it's a supply and demand equation, if there's a lot of liquidity availability of Islamic financing, some of the major chains would still not perhaps be able to benefit from that because of the nature of their operations. And I like what you said about creating the whole environment. And I'll come to this issue with carve-outs. I've seen this for years where they've tried to carve out prohibited activities or services or non-compliant. In the Malaysian model, Malaysia is far more advanced in its Islamic finance sector. And you're seeing very interesting variations. For instance, if you had a shopping center and it had one element of it that wasn't compliant, the board may review that and say it's less than, I don't know the benchmarks, less than 5% or less than 1%, and still allow it to happen, the financing to happen, because it was at a benchmark level that was acceptable. At Shaza, we don't believe in carve-out or anything, because we're creating the total environment. And in any case, our owners wouldn't allow that in any case because they have no interest. It's the future development that will be interesting.
Right. Okay.
Sorry, can I very briefly, 5 seconds. You see, carve-outs, I mean, this is the ideal situation, what Simon is referring to. But sometimes people want to make an entry into this space. So that is where you have to sort of maybe willing to look away from certain concerns for a while. So with the idea that starting off with something is better than not starting at all. So, yeah.
Okay, I'll just come to you in a moment. Sure. We've got about 5 minutes left, and I'm keen to encourage if anybody in the room has any specific questions relating to Islamic financing. I think we have a hand up over there. If you can say your name and your organization and who you want to put the question to.
Okay, my name is Hisham. I'm working in Kuwait in a real estate company. My question is to Mr. Momin, Dr. Momin. For which extent the Islamic banks are interfering in the observation of the hotel? I mean, the designing, let's say, or the daily operation to make sure that it is complied with Islamic Sharia in terms of activities. This is first. Second of thing is Islamic banks are thinking of financing consumers. Now Islamic banks, they are financing owners to build hotels. But what about supporting the consumers? I mean, provide some finance to consumers to finance their trips or spending their summer outside, or something like have a privilege card to be applied in some halal properties, even outside Islamic world.
Thank you. First, thank you for conferring a PhD on me. I will take that for calling me a doctor. So, okay, Islamic banks, you know, from a bank point of view, see, if the hotel has its own Sharia advisory, that would go into the nitty-gritty of everyday operations. An Islamic bank would only be concerned for its shareholders that any income flowing into the books of the Islamic bank is not non-Sharia compliant, is not non-Sharia compliant. So I don't think so a bank would go into so much of granular detail. You see, what is the primary concern of the bank? That whatever the monthly installment is coming to the bank is not generated from an income which is not acceptable for an Islamic bank. So once that is proven, the bank does not really have to go on the field to monitor that. On the second part of your question, I think that is already happening. Islamic banks are financing the consumer with, you know, fancy credit cards, traveling financing, so many, but that is more on the retail space. So usually when you're talking about hotels and real estates, that's more of wholesale banking. So if you are interested in that, you can check the retail space of Islamic Bank and Islamic Windows. There are many products which cater for consumers.
Okay, thank you. Rafi, I interrupted you earlier. If you want to make your point, and then we'll come to the question.
No problem. I just want to also mention, just as Simon mentioned, Malaysia has been at the forefront of Islamic finance in terms of regulation, standards, product structuring. They're also now at the forefront of, you can say, this modest or family-friendly travel or halal travel compliance. There's actually standards that's being developed, and OIC as a body, which is the overarching 57 mostly Muslim majority countries, we're actually doing a strategy work for all Ministry of Tourism from the Islamic countries on how to engage and market and create products around similar to what Shaza has. And they're also developing standards. So there's actually the compliance, there's possibly a rating system scheme that is being considered. I don't know how relevant that is, but just to add to your point that there is an industry-driven compliance or rating scheme being considered, standards are already being developed. The other thing I just wanted to add earlier was, you know, I think the carve-out question being as interesting and relevant as it is, I think equally interesting is the demand side of the opportunity of pure projects that are very easy match for Islamic finance. And the convergence we're seeing is, and the opportunity from an Islamic financing point of view and from a hospitality sector development point of view is equally strong. So I think if you look at, you know, the Shaza's case is a reflection of the wider trend. I can tell you Abu Dhabi, for example, hosted an event last year, and they're really pushing this in developing concepts that are more dry and appeal to this market segment, because increasingly the customer side, the demand side is becoming real. So I think the more exciting part from an Islamic financing and this hospitality sector is the convergence of the clean opportunity.
Rafi, I don't want to encourage competition.
Right. But just Simon, on the point, in terms of your experiences at Shaza, you know, what is the rate of growth in terms of who is the client base, and how does it differ from the conventional hotels, if we call them that, and what is the rate of growth compared? You know, we've talked about oversupply today in the market.
Yes.
Is that the same?
I think the rate of growth is hard to measure because of the sophistication of this market segment. We'll appeal to Muslim travelers, families, in any part of the world, because we're not just doing this in the region. In fact, please note that the London Shard was financed through Islamic finance. So were Chelsea Barracks by Qatari Dia. So is the refinancing of the Dubai Mall. It's just that you don't see it because you don't take an in-depth look at it. What Rafi's saying about the extent of halal travel, this is the market that is currently staying in our usual international hotels that don't have an option. We provide that option, so I anticipate the rate of growth would be very rapid, as we're seeing with our growth.
Okay. Now we had a question at the front here. If we could have a microphone to the front row, please.
Good afternoon. I'd like to pose my question, Mr. Momin. Let me throw a practical question at you. Let's say I'm an investor, I'd like to build a hotel in Maldives. You're Mashreq Bank. This is a very practical question. I would think that the structure for a hotel would be of an ijara structure. I may be wrong. I'd like to know more about the structure. I'd like to know whether the pricing within Islamic banking, repeat, the pricing within the Islamic banking, does it have a country risk premium, yes or no? Thank you.
Thank you.
So your first part, I mean, it can be ijara, it can be a sale and a leaseback structure. That would depend if you already own the real estate there, if you have the land on which you plan to build, or you are looking on procuring that land as well, and you're looking for financing for that as well. So it's not an easy answer. We have to look at all the dimensions involved, and then we can answer that. Country premium, I won't be the right person to answer that question. That would more be the head of risk, maybe he can answer that question in terms of country premium. But on what mode of financing would be used, that I need to ask you more questions to give you the best answer.
Let me probe a little bit more. The country premium goes into the pricing of any financial product.
Yes.
So therefore, if you're Mashreq Bank, you want to lend to Shaza Hotel in Deira, I can understand that. But if you're lending, let's say you want to do cross-border lending to
Yes.
Maldives, there's an element of political risk or whatever, that country risk we call it. Every lender in conventional banking, they add a premium, country premium or credit risk premium to that.
Right.
I like to know the financial, if the product is going to be purely Islamic,
Yes.
by logic, the pricing has to be all Islamic, would it not be?
You see,
Therefore, you would have to add a premium to that initial pricing for the credit.
I'll try to answer your question quickly. You see, pricing is something in Islamic finance which is at the discretion of the bank and the client. Whatever they mutually agree on, you see, there are so many factors which are going into the pricing. It's not only the country risk. So whatever the pricing a financer is quoting to the client, he is already considering multi-dimensions in his mind to reach that figure. So if he adds the country risk premium into that, and you ask a Sharia scholar, can an Islamic bank do that? And the answer would be yes. Because anybody who is taking a risk, or anybody who is, say, if it would be a lease structure and is leasing something, he can balloon his price depending on the risks he's facing.
So pricing is not influenced by whether one goes conventional or Islamic. It's an independent thinking.
Yes, exactly.
Thank you.
Okay, just on the point about countries, actually, I'm interested in the different country markets, because it would seem to me that if we were in Saudi Arabia, they're not going to allow non-Sharia compliant hotels to operate. So is there any, in some countries, is there actually the need for a separate Islamic finance market? And, how does it vary from country to country?
I think there's a need in most of the countries. Saudi Arabia may be an outlier in that sense. But you see, sometimes things become so mainstream that they lose their identity. So even in Saudi, I think there's the potential. So if it's branded properly, there is some excitement in the Saudi consumer as well. But globally speaking, I think there is, as the consumer demand increases, there will be international bodies setting standards and rating certain hotels or other even banks on their level of being compliant with Islamic finance or Sharia compliant hotels. So we'll see a growth of rating agencies rating these places in different countries. Yeah.
Okay. Now, thank you very much. I'm going to bring this session to a close. We had a few extra minutes there, so I hope you appreciated those. Thank you very much for your questions from the floor. But most of all, ladies and gentlemen, please thank our three excellent panelists, Simon Coombs, Momin, Hyat, and Rafi-uddin, Shikoh. Thank you very much, gentlemen.
Thank you.